there, Leslie McDonnell with Remax Select Properties. I feel like when I'm reading some of the headlines lately, I feel a little bit like Chicken Little is running around the world going, the sky is falling, the sky is falling. And in all honesty, it's not. It's not falling at all. And what's happening right now especially in the real estate market, is very typical. We've seen these types of things happen almost in 5-year cycles. The market goes up, it goes up a little bit crazy, and then things happen and it goes on. And let me just show that to you here. So I'm going to go right here. I have for the Real Estate Board of Greater Vancouver. So this is, Whistler, Squamish, all the way out to sort of Maple Ridge, Mission, Abbotsford. Or sorry, not Abbotsford, just Maple Ridge. And then the Sunshine Coast. And this is the home price index prices over the past 17 years. And you can see in 2005, that price was $354,000. So that's the aggregated prices for combined a detached house, apartment, and condo and townhouse. And over the past 17 years, that number's kind of gone up, dipped down, gone up, dipped down, gone up, dipped down, to today's price at 1.235. Now, as an investment over the past 17 years, you're seeing a 250% increase, which is very, very substantial. A lot of people that, purchased their home many, many years ago have seen a really nice appreciation over the years. Currently, right now, we are in a shifting market. The market started shifting about 6 months ago, and we're really sort of starting to get into it now. Of course, I'm sure you probably all noticed that the Bank of Canada rate also raised yesterday, and now we're at to 2.5%. I'm going to get to that in a few minutes, but before that, I just want to talk about this sort of last 17 years. And what I want to highlight is that if we look at it, this is cyclical. Real estate is very cyclical business. We saw a rise going up in 2008, and then what happened in 2008? Why, yes, the stock market crashed. That caused everything to sort of pause, and then it dipped down in 2009, and then we started to see recovery in 2015. Up until 2012, we kind of hit a bit of a peak. Peak there in 2012. Things were really quite stagnant for quite a while. And then 2015, things shot up. Now, what happened in 2014-15 to cause that shoot up? I honestly think a good portion of what happened was, if you recall what happened in 2012, Vancouver hosted the Olympics. And that shone a huge light on our area, and it showed the world, look at how beautiful Vancouver is. We have ocean, we have mountains, we have clean air, we have temperate climate, we have everything that everybody is looking for. We've got lots of water to live in a wonderful area. And a few people went back home after that, and they went, geez, that place in Vancouver is really nice. And then 2015, everybody said, let's all go move to Vancouver. And also, just regardless of, there's a lot of people that locally as well that really like living here. And maybe it was time where they were just, trading up into the market. 2015, we saw things shoot right up. And 2016, it was just, we're going up on a high scale here, 2, 3, 4% increase in the market every single month. And then the government stepped in and they implemented a foreign buyers tax, and that shocked the market for a little bit, and everybody went, whoa, what's this going to mean? And things dipped back down for about a year, and then they started to go back up, plateaued a little bit. And then 2019, we were, in a bit of a downturn, and then 2020 happened. Global pandemic everywhere. Everyone saw a shift in their life. There's not a single person, I don't think, that has not been impacted by the COVID pandemic. And what a lot of people decided to do was this work from home. Well, if I'm going to work from home, maybe I'll live further out so I don't have to worry about commuting so much. Prices are a little bit lower. That put the pressure on the demand. The supply didn't go up, and therefore the prices rose. And we can see that here. And then come, just recently, we've been seeing interest rates rise, which has caused a lot of people to sort of just slow down, reevaluate what's happening in the market. I suspect we will probably see a similar trend as what happened here in 1718, where things are going to plateau for a little bit. They might go down. And then in sort of 3 or 4 years' time, we're going to see the market go back up again. What I also wanted to share with you, which I found very interesting, was the Cullen Commission report just came out. And that was a report that has been in the making for about 5 years. And they were looking at money laundering in British Columbia, sort of how it happened, what caused it, what industries were helping push this agenda. And it does show here that the housing unaffordability in Vancouver did not have a lot to do with the money laundering issue. The strong reasons are the fundamental factors are supply and demand, population increase, and low interest rates. And the interest rates in Vancouver have been low for a very long time. If we look here, this is the historical data over the bond rates. So from basically 1935 all the way to 2010. So it doesn't talk about the bond rate today, but that bond rate today is about 3.5%. And we can see that it's, 3.5% is where we are today after things have gone up. And as I look historically, it's never, in the late 40s, we're seeing it under 3%. But otherwise, it's been quite high. The highest being 15 in 1981. So we've historically had low interest rates, which has really been pushing some of this high demand in our market. And today, so you can see here, we've got the 10-year bond rate is 3.15%. And then, of course, the central bank rate is 2.5%, which went up a whole point the other day. That being said, it's still quite historically low. We will probably see more increases in the coming year or so, which is going to affect some of the demand. And being a girl from an economics background, my father taught economics for 30 years and I studied it too in university. I just thought I'd take us back to the basics and just, in case you're just curious as to how the supply and demand works. I know you probably already know this information, but I wanted to share with you. So we've got our demand line here and our supply line here. So if you have a lot of supply and a low demand, your prices are going to go down. But if you have a high demand and a low supply, you're going to see your prices go up. High demand, low supply. And that's sort of what drives. So when we talk about the supply and demand, that is sort of how it graphically looks. Now, there's a lot of factors that go into that as well. If you've got questions about what's happening in the real estate market with respect to you, I would be more than happy to talk about your options and help you decide what the best action is for you to take. And I hope you're all having a fabulous day. Thank you so much. It's Leslie McDonnell with RE/MAX Select Properties.